Hello and welcome back to the basic accounting series. Now this is a continuation of the third video. As you can see, we calculated the closing balances of ledger accounts or the T accounts in the previous video. We learned how to post the journal entries in the ledger accounts or the T accounts and then calculate the balances, debit balances, credit balances, which balance is called as debit, which side is called as the credit balance. Now I am recording this video immediately after recording the third video. So I'm going to take the same transactions, same ledger accounts and T account balances and post them to the trial balance. Here we are just learning where to put the balances on the debit side, debit column or the credit column. So the purpose of this video is just to understand what to do with the balances that we calculated while preparing the ledger accounts or the T accounts. So one by one, let's take the accounts. Equity. Equity account has a debit balance or a credit balance. Now see, equity account to balance carried forward 25,000. It is written on the debit side, but it actually represents credit balance. Why? The credit balance was heavier and we just took this balance, credit balance. So I will write this on the credit side, 25,000. Next is cash account. Cash account balance 23,400. Now it is written on the credit side, but the debit side was heavier, so cash had a debit balance and cash can never have a credit balance. How can you spend more than what you have? In terms of cash, see, for a bank may have a negative balance if it is an overdraft account, right? There is something called as overdraft where you can withdraw amount from a bank account, the amount which is more than what you have in your bank. So that facility is given. But in cash, I have 1000 rupees cash in my wallet. Can I spend 1200 in cash? No. Cash will always have a debit balance. 23,400 in the debit column. Sorry, 23,400. Next, bank account. Bank account, buy 2 cash 2000, buy furniture. Which one is heavier? Debit side is heavier. So buy balance carried forward 1000. So this is my balance. Bank account, debit balance 1000. Furniture. Furniture account, balance carried forward is 900. Debit or credit, it is written on the credit side, but it is debit balance. So 900. Depreciation. Depreciation account written on the credit side, which means it is a debit balance. Debit side is heavier, 100 debit column. Prepaid insurance. Prepaid insurance written on the credit side, but it represents debit balance. 900 prepaid insurance. Another way of understanding prepaid insurance is an asset, and assets always have a debit balance. It should be on the debit side. Insurance expenses. Now, insurance is an expense. Expenses and losses are debited always. It should ideally have a debit balance. Does it? Yes. Debit side was heavier. No transaction here. 100 rupees transaction on the debit side. Carried forward balance is 100, representing a debit balance. Next, unearned revenue. Where is unearned revenue? 500 rupees is the balance carried forward. Debit or credit? Credit side was heavier. No transaction on the debit side. 500 rupees, one transaction on the credit side. Credit side is heavier. So this will be written on the credit side. Another way of understanding unearned revenue is a liability. We discussed it in the first video. It's a liability and liabilities have a credit balance. Next, discount received. It's an income. It should have a credit balance. Does it? Yes. Credit side was heavier. We took the balance 100. Discount allowed. It's an expense. It should have a debit balance. Let's see. Debit side, one transaction of 200. Credit side, there was no transaction. So we buy balance carried forward 200. We took the balance of 200. Debit side 200 rupees balance. We're carrying it forward. Discount allowed. Sorry, this discount received was credit. It's an income, so I have to write it here. Discount allowed of 200 should be debited. Debit column. Next. Sales. Sales. Sales has to be credit. It's an income. So 2 balance carried forward 2000. This will be written on the credit side because credit side was heavier. Balance was written on the debit side. Next, purchases. Purchases, expenses, it should come on the debit side. Does it? Yes. Only one transaction on the debit side, nothing on the credit. Debit side was heavier. 1000 rupees carried forward. 1000 debit balance. Salaries payable. Salaries payable is a liability. It should have a credit balance. Does it? Buy salaries expenses 700, only one transaction on the credit side, no transaction on the debit. That means credit side is heavier. So this balance is a credit balance. Salaries payable 700. Next, salaries expenses. Expenses should have a debit balance. To salaries expenses 700. Buy balance carried forward 700. So this represents a debit balance. This is how the transactions are recorded. I'll give you 1 minute or rather 30 seconds to take the total. Let's see the trial balance tallies. Or you can just pause the video and see if the trial balance tallies. It should tally at 27,300. Sorry, 28,300. I've already taken the total. I cannot waste time in taking the totals here. So it's 28,300. Just check if if the trial balance tallies. Now we'll be using the same trial balance to prepare the income statement and the balance sheet. So I hope you're able to prepare the trial balance now. And in the next video, we'll prepare the income statement and balance sheet. Till then, happy learning. Thank you.